So the Canadian mortgage debt has gone up to $1.69 trillion, the fastest rate of growth since 2010. Is it a good news or a bad news? Let's find out. What is up YouTube? What is up Canada? Thanks for joining in. As you know, the purpose of this channel is to educate my audience about the real estate market in Canada in general, with particular focus in Toronto and GTA, as well as some of the macroeconomic factors that has an impact on the real estate market. Now in today's video, I'm going to cover this news when Stats Canada published the numbers. According to that, the Canadian mortgage debt has gone up to $1.69 trillion in the past year, which is the fastest rate of growth since 2010. Now, is it a good news or bad news? You need to understand, the context. If you look at the historical graph, 30 years worth of data, that shows the amount of, mortgage debt has been on the hockey stick, almost 2000, right? And you can see this graph, it has been constantly going up. So it's not surprising that if we hit another highest peak, next month. But the key thing here, guys, is it's the rate of growth. It has been fastest since 2010. And the last time when we saw this kind of a crazy growth in terms of mortgage debt was in 2010. And that literally shows you the demand in the market with regards to residential real estate market. It's so significant, or it has been so significant in the last 12 months or so, which has completely, inflated the residential mortgage debt across Canada. Now, in other words, what I can say that, the amount of debt the Canadians has taken in the last 12 months is equivalent to 7% of the GDP. So that shows you how much reliance the Canadian real estate market has in terms of the economy. So the people who are wishing for a housing crash, they should think about that. If this happens, it's going to be a disaster for the entire country, not just for the housing sector. And I agree this should not happen, because if you have economy already struggling and there is no other segment producing, recovery, and only one sector is producing, you would not want to kill that segment. You would like to see that segment, growing until the other segments start, catching up with regards to recovery. When you're wishing for a housing crash, think about it. If it's going to happen, it's going to basically collapse the entire economy, not just the housing. I'm not naive that this has to be controlled and sustained, because it's not sustainable, right? You need to see the healthy economy across the board, not just one segment. But that's not the point. My point is, the reason why this is happening, you need to understand this is because our financial system is built for this. Last week, I covered a news where big corporations like condo developers and hedge fund owners are basically jumping into the residential real estate market to purchase a swath of single family homes. I gave you all the reasons, why this is wrong at all different levels. But I'm going to tell you the reason why this is happening, because if you look at these big hedge fund owners and investment organizations, their job is basically to collect money from the investors and then put them into some sort of an asset class to give them return, right, over the period of time. Now, historically, we have seen they were investing into stock markets and condominium buildings and commercial real estate and other asset class. It has been happening in the residential real estate market in US, but in Canada, this was not a practice. Now we saw these big corporations jumping into it, and the reason simply is they don't have any other options to look at. If you look at the Canadian government bonds, they're literally yielding negative. Like, if you adjust the interest rate with the inflation, which is constantly going up month over month, it's basically yielding negative. So they have no other options to diversify their portfolio but to look into the asset class which are producing, good, healthy return year over year. And it's no wonder the real estate market in Canada is returning 40% return, year over year. So that's the reason why these, pension fund owners and hedge fund owners and big corporations are piling money and buying the sweat of these houses in order to satisfy their clients' need, because they have to basically provide them the return. The problem is, I think by doing that, you are basically competing with an average Joe who is basically buying one or two residential properties just to make up for their retirement. Plus, it's going to inflate the prices up further and push the average Canadian, away from the property ladder. So at all levels, this is wrong, morally incorrect, and I've been telling my viewers and my friend circle that this should be stopped. This should not be allowed in a country where we already have a very low supply of single family homes. We have so many condo built in the last 10-20 years, but we don't have a lot of single family homes built in order to satisfy the demand. So when we see these kind of investors are jumping into buying the swaths of these developments. This is completely wrong. I wanted to just share with you my thoughts this week, and I would like to understand your point of view as well. So please put your comments down below and questions. I would like to understand what you think about it, and let me know what you want me to make my next videos on, because the topics that come up with, basically I get the feedback from you guys to build the videos on the new topics as well. So I will see you in my next week video. Take care.